Hello guys, how are you? So today we're gonna talk about the RSI indicator. Probably some of you already used it or using it, and probably also heard about the RSI divergence. So today I want to break all the myths and all the bullshit that people talk about this indicator and how you should trade according to this indicator. So let's first start to understand what it's mean RSI. RSI is Relative Strength Index. Okay, it's a momentum indicator used in technical analysis. RSI measures the speed and magnitude of a security's recent price changes to evaluate overvalued or undervalued condition in the price of that security. The RSI is displayed as an oscillator on a scale of 0 to 100. And traditionally, the RSI reading, it's of 70 or above, it indicates an overbought situation, or 30 or below indicates an oversold condition. Okay, here we also have the calculation of the RSI. You don't need to go exactly into the calculation and to understand exactly how it works. Like, you need to understand this in general. Okay, so let's see what it's mean. The standard number of periods used to calculate the initial RSI value is 14. What does mean? That mean that when you open the indicator in your chart, the default will be 14 candles. It's really important to understand that it's not 14 days, it's 14 candles. And it depends which chart do you use. If you use the daily chart, it will be, of course, 40 daily candles. If you use the 5-minute chart, it will be 14 5-minute chart candles. So it depends which time frame do you use. Okay, next. For example, imagine the market closed higher 7 out of the past 14 days with an initial average gain of 1%. The remaining 7 days all closed lower with an initial average loss of 0.8%. Okay, and here you can see the calculation and how it should be calculated. Okay, you don't need to exactly know the calculation. Okay, you don't need to calculate it. You just need to understand what the RSI means. Okay, overbought and oversold conditions. So there is more strict traders if we know that above 70 it's overbought condition and below 30 it's oversold condition. The strict traders, some of them use 80 and 20, 80 for overbought and 20 for oversold. And I will tell you a funny story, funny and sad. It depends who looking at it. Uh, a pretty long time ago, okay, like 13 years ago, something like this. I saw in YouTube one guy with a lot of followers that the title of the video was 100% win strategy, okay, something like this. Okay, I watched the video, and what the video said: if the strict trader is using 80 and 20, be a super strict and use 90 and 10. And then when the stock or the currency, doesn't matter, in the past I used to trade Forex, but now I moved to the stocks because it goes me like much more better, and it's like easier for me. So it's leave it. Above 90, it's overbought condition. Okay, so what you need to do, you need to short when the RSI reaches 90, short it. And if it keep going higher, add an amount, and then your average price will be higher, and then at some point it will reverse, and then you will earn, because it shouldn't like go too much lower, because the average price is becoming higher. And even if it will go to the first point that you bought it, you still will be in profit. Okay, sounds good. 2.5 months, it worked perfectly. I thought at the end of the year I will be millionaire. But after 2.5 months, I realized that the stock can go higher and higher and higher, and you don't need to reverse, okay? You don't owe nothing to anybody. So I almost lost $10,000 in 5 minutes. Fortunately, I lost only $6,000. Fortunately, like it's small amount, yeah. But that's how it was. Okay, so never listen to any guru. It doesn't matter how much followers do you have. Never listen to any guru, and only trade by the logic and the statistics that you do by yourself. Okay, so let's get back to the RSI. So what we want to do, okay? By the way, the institutional use also the RSI. This is the only indicator they use, and they use it by divergence. Divergence. What I want to see? I want to see in the chart higher highs, okay, like I already drew it here, and higher lows in the RSI indicator. Okay, that's mean that the momentum is already going down and the stock should reverse soon. But when do you need to take the trade? Remember all the indicators, all the indicators, the RSI, the MACD, Bollinger Bands, all the indicators, doesn't matter which indicator, they are auxiliary tools. You can use them as only as auxiliary tools, not as a signal to go buy or long the stock. The kings of this situation are the price action and the volume. That's it. You take the trade only by price action, by the candles, and by volume. The auxiliary tools can only help you and say, okay, it's good time because I'm support you, or no, it's not so good time because I'm not support you. But don't forget, even then, auxiliary tools can be wrong. Okay, so you need to take only the trade only by the price action and the volume, and after you have a strategy, because you need something systematic that you can repeat the trades and you can make a statistics on it. Okay, because if you take like randomly trade, like because you saw a reverse candle, so you will have it a lot of time in the graph. Okay, even when the RSI will show you that the stock should like reverse, and you get in the reversal pattern, it still can be goes against you. But if you don't have a strategy that can be repeatable and can be easy to analyze, so it will be hard for you to understand where and when you mistaken. Okay, so you need to have first strategy, second understand the patterns and the price action and the volume, and third, only then you like use the auxiliary tools. Like let's say now it's the RSI. Okay, but you use it only by divergence. This is the only way that you need to use the RSI. The only and that's it. Okay, so if you want to go long, you want to see in the chart lower lows and on the RSI lower highs. If you want to go short, you want to see higher highs and higher lows on the RSI indicator. That's it, guys. It's like super simple, super easy. It's nothing complicated. You just need to develop your strategy and your way to trade this, and to understand how you look at the chart and develop a strategy that you can analyze and make a statistics on your trades. And this is the only way that you should trade and use the RSI. I hope it was helpful for you. I would love to hear from you in the comments. If you like the video, please like it, comment, and subscribe to my channel. The next video probably will be crazier than this one. We will talk more about strategies, indicators, and stuff like this. See you in the next video. Bye bye.